Great. Well, this is my final fireside chat of the day, and I'm lucky enough to be here with Greg Kidd, who most of you know. He doesn't really need an introduction, but I'm going to let him talk a little bit about his background. He was the chief risk officer at Ripple back in the day. He worked with the OGs, right? You worked with the Arthur Brito's, the Chris Larsons. So talk about a little how you started off there. You're now at the third iteration of the XRP Las Vegas conference. How did you get here? How are you feeling?
First, thanks for having me.
Of course.
I mean, I found out about Ripple at a poker game. There was no Bitcoin company, and they said, well, there is a company, and it's Ripple, and they're doing chain, and they're doing all the other currencies. And so I went in to see Chris, and I said, you know, I think you need a chief risk officer or a compliance officer. And Chris was like, why? What could go wrong?
What year was this?
This was back in 2012.
Wow, okay.
2012. We just started the chain. I think Ripple lost the first 40,000 transactions. So we didn't have the Genesis transaction. It went from, 100 billion to da-da-da-da. By the time I got there, it was like the disciples. There were 188 accounts, and that was it. So that's how early on, how early on it was. But yes, it was Arthur and David and Stefan Thomas, Chris. It was the whole original gang.
Mm-hmm. Amazing. And what are you doing now? Fast Bank. Tell us about Fast Bank.
So I made the decision of what would it be like if we could put the banking industry directly on chain. So you've heard some of the other tokenized asset talks today. So the question is, instead of having like a Circle or a Tether in between, what if US banks put dollars directly on chain, including the XRP ledger? So that would mean that the ledger of record isn't some like old 50-year-old bank core, it's actually the blockchain. And so to do that, had to buy a US bank, and you can imagine, even though I'm ex-Federal Reserve, having worked at Ripple, made some other investments in crypto, it was not an easy lift, but last year we were finally approved. Might have helped that I ran for Congress and was going to make a stink if it didn't happen.
Here in Nevada, right?
Here in Nevada in the 2nd District. We purchased Vast Bank, OCC, nationally chartered Fed holding company, and we have one purpose, which is to put the US dollar on chain. And what that means is these are FDIC insured US dollars, complete with Reg E chargeback protections, means if you get robbed, you get your money back, running on chain. And in particular, under the new administration with open banking and fair access, those dollars can be held by every person all around the world. So that means essentially everybody in the world has a US dollar deposit account, FDIC insured. And so I'd ask you a question. You've heard about the new 5% tax. If you're on this ledger and you're sending money from, you're here under one visa and you're sending it back home to your mom, if that money never leaves being a dollar, never leaves the country, never even leaves the bank, is that a remittance? I don't think so. I think in this new world, if everything is on ledger, including the XRP ledger, and it's just moving on ledger, what does it mean anymore to move money from one country to another? It doesn't really happen. It just all stays on ledger. And it's the XRP ledger that made that possible all the way back in 2012. That's really why I joined Ripple to this day. And so buying a bank and putting US dollars on, we've also made an investment in the Bank of London, and I'm closing a bank deal in Europe soon. So that means dollars, pounds, and euros running 24/7 bank money on chain.
On chain, on the XRP ledger. On
the XRP ledger. Okay. We'll put it on other ledgers too.
News.
Yep. So any developer can use any ledger, but it means your money stays with you wherever you go. So any application you use, when you connect with your identity, the money, and this is US dollars, full bank US dollars, not some euro dollar or Fuguzi dollar, but actual US bank dollars moving on chain. So that's just, it's kind of like you came here to the casino and you bought poker chips, and they don't just work at every table for every game, they work at every casino, and you know what? They work at 7-Eleven, not just here, but anywhere around the world. So it's the true big kahuna of tokenization.
talking a lot about stablecoin legislation right now. Tell me how this is different to a dollar-backed stablecoin, and what makes your product better.
Sure. And we're real friendly with the stablecoin legislation and the stablecoin issuers. The difference between a stablecoin and a deposit token is stablecoins, when they're issued by whether it's Circle or Tether or whoever it is, those have to be backed one for one, which sounds like a good thing, and it is a good thing. But in a world where everything's backed one for one, it's kind of like the gold standard. What banks do that's different is banks take that money and they put it to work. They use it for credit formation. So if the whole world went to stablecoins, there would be no credit in the world because everything would be backed one for one. You couldn't lend it out. So we use the same technology as a stablecoin, but we're 8 times more capital efficient because we can put that money to work. Now, if we do a bad job at putting it to work, you get in trouble. And when you get in trouble, that's where the FDIC insurance comes in. So we can actually have and be part of the fractional banking system, but still using the same technology as stablecoins, but with the liberty to make that money put to work much more capitally efficiently. And what does that mean? It means we can pay interest. And I think you know in the stablecoin legislation, they are forbidden to pay interest. And so we can pay interest, and we can obviously give that to the end user, but we can also share it with all the other developers and folks. So it's an ecosystem that pays interest, has insurance, has consumer protections. Again, we will have cross liquidity with the stablecoins, but you know, the stablecoins are kind of like, can sit in a non-custodial wallet without identity, and that's okay until they kind of get stolen or a bomb goes off, or you know. So we will coexist with the stablecoin world, but I actually think the world of, I think there's about $420 trillion of assets in the world, and so tokenizing all those assets and bringing it on chain onto like the XRP ledger, just a huge opportunity, and we're right in position number 1 for that.
Amazing. The FDIC has historically been pretty anti-crypto, as has, well, at least in the prior administration, as has the OCC. How have your conversations been with the FDIC and the OCC since the turn in the administration?
Well, you know, since November 6th, there's been a little change, in case anybody noticed, right?
Just a little.
So the executive order has come out, and it has said 2 key words: open banking and fair access. And once those 2 words got out there, and there were some changes at the top at the FDIC, the OCC, not so much at the Fed, but even at the Fed there's change.
They're working on it.
It means it's game on. And there's been entirely a wind change in terms of what the conversation is like with regulators, and now it's risk on rather than risk off. And so I've never seen in all my time since being in payments, in crypto, the planets aligned as well as they are now. And so amazing things are happening. We couldn't be more excited to be able to finally, so take everything that's on the ledger has a crypto address and a bank account routing number. It's not like there's this and this and they, it's one ledger, dual addressed. It's like in the old days, they used to have CDMA and GSM. Somebody finally said, why don't you just make the phones do both? Or 110 volt, 220. Now everything is one thing, but the ledger of record, make no mistake, is a crypto ledger like the XRP ledger.
How big has the rollback of reputational risk been for you, for this industry?
So this is Nevada, and you know, we call those the consensual vices. And so there's been a directive that reputational risk will no longer be part of the exam guidance. And so shame is no longer a part of risk management. Risk management will now be...
At the OCC or the Fed or...
At the OCC, the Fed, and the FDIC.
All of them.
That has been stricken from the manual, and we intend to enforce that. In fact, if those industries are not given access, and those individuals are not given access, we view that as discrimination. And so now we have a level playing field. So if any institution wants to access your money and you give them permission, it doesn't matter the industry. We're not in the nanny state anymore. Reputational risk has been stricken, and we are looking to absolutely eviscerate that from any of the procedures. We'll still be very focused on risk management. We will still do compliance if you're on the OFAC list. You know, we'll keep an eye on you. But the concept that there are shameful industries, they're either legal or illegal. And if you're legal and licensed, we're going to bank it.
How do you fear that that may change in a new administration? Is that something that you think about? You know,
Wasn't
maybe
this
we're going to
administration going to last forever?
Well, I know.
I thought that was.
I think maybe if Trump goes for another term.
So things could always change, and somebody could come back and try to put that back in again. But this is kind of a genie out of the bottle.
I was going to say, can you not put the genie back in now?
It's kind of a genie out of the bottle thing, and I think some of the industries that have not been able to get banked are like the cannabis industry,
right,
et cetera, whatnot. And once you normalize those industries and people kind of see that it's okay, we banked them and the world didn't come to an end. It may be a fight we have to fight in the future, and part of the reason I'm still in politics now is to make sure there's not a new shame list of people and industries that can't get banked. And when I say banked, I mean really get access to fiat currency running on chain 24 hours a day, 7 days a week.
How are you still involved in politics?
So I ran for the congressional seat in the 2nd District here in Nevada previously. I'm now working on legislation to create a new form of a bank charter that's focused only on deposits and payments, no branches, no lending. Basically, I will continue to promote legislation. So a company like Ripple could actually get a bank license, right? And so, not saying that they want to, but we're going to make it such that banks no longer have a monopoly on banking. Banking should be accessible. So think digital wallets, think remittance companies, could be retailers, all of those should be able to be, and I believe that in the future, not the very far out future, but the cost and price of payments, because the cost and price of payments is almost zero on the XRP ledger. There's no reason that payments shouldn't be universally accessible and the price charge should be zero. It's like a public good, and that means banking is just basically like breathing the air. And so the concept that there'd be a limited group of folks that got into that club, I mean, during the Biden administration, I think only 2 licenses fell into the hands of someone who wasn't already a bank. It was Jackie at Lead Bank, and we got Vast Bank. And that's not the way it should be. Just because I know how to work the system shouldn't be the fact that only people like Jackie and I get a bank. There should be hundreds of folks. There should be, used to be that way in this country. There was competition, there was innovation, there was inclusion. That fell off after 2008, but it's coming back now.
Oh, okay. You'd say after 2008, not the product of the prior administration, the prior 4 years. It's kind of a lead up from the financial crash.
It all started in the financial crash, but there was sort of a, it went off the rails then, and it never got, people blamed it on the crash, but it had a lot to do with politics. Choke point 1, choke point 2. I'm here to make sure there's not a choke point 3.
Were you ever a victim of choke point 1 or 2, you personally?
Yes. I have been,
How many times have you been debanked?
I've been debanked many times. It's funny thing is when you get debanked by like Wells Fargo and they still send you wine, because they know you're important. They're not going to bank you, but they don't want you not to like them and stuff like that. And they know that you're a sinner in this area now, and maybe that'll become okay. They don't want to like totally burn the relationship, but we love you, Greg, but we're closing your bank account. So yes, I've been debanked, many times, and my portfolio companies have been debanked, and I just, under open banking and fair access, I just think that should never happen. It would be like saying, you're too immoral to get like a phone account, right? Like, so I think banking should be like access to the public payphone. Everybody should have access to it, right? Just open access is just, foundational principle for me. But no, I have been debanked many times.
Wells Fargo, huh? They're my bank too.
Well, yeah, and they're banking me again, so like,
oh, good.
That's right. But yeah, it's embarrassing to be debanked, and even with my own company, I have a debit card for my own company, but I travel around, and there's still a lot of the old rules and the old fears and stuff. So many times I still have like my debit card accessing this ledger, I get a fail. And I'm like, but I own the bank. And they're like, don't get uppity with me, right? So it doesn't, even when you buy the bank, it doesn't that mean that you still, you don't get turned down.
You don't get, special treatment. I want to ask you something a little off topic, but talking about this is a big thing at the moment, putting Bitcoin, putting XRP in companies' treasuries on the balance sheet. What's your take on that? Is that a fad? I mean, it's a big thing with Bitcoin right now. I'm hearing it's going to be more of a thing with XRP as well, XRP buying vehicles. In your take, in your view, you've been in this industry a long time. Do you see that continuing?
I'm doing it. So I have a company. Sometimes I don't even know the name of the company that I'm buying, but it will be a public company entity.
Okay.
And I am funding it with Bitcoin.
Okay.
For the capital, but it will be about issuing fiat money on crypto rails. So it's a weird combination. You might use Bitcoin as the best store of value, but other currencies and other ledgers as the best means of exchange.
Right.
And so collectively, that may be a superior funding mechanism. So I've always been agnostic. I think most people know that I have some Bitcoin holdings. I've been involved with it, put first money in at Solana. But in this particular situation, XRP is where I learned it all, and I want to thank Arthur again and David and Stefan. They were all there. Chris tolerated me for as long as he did. Brad, maybe not so much, but for good reason. But it was the best 101 education you could have. And I couldn't be prouder that, the folks at Ripple are really the ones that, on top of the technical innovations, the legal regulatory environment, they were the first to pick the good fight, fight the good fight. And without that, I'm not sure any of this would have been possible. Like at that time, I just want to say thank you, right? And, I remember when Jay Clayton, we thought, so I went fishing with Jay Clayton last year. And it was a big makeup, right? Because Jay Clayton kind of I think he got the XRP price down to about 16 cents,
Something
right?
That, yep.
Gave him but the funny thing is, after Jay Clayton, we thought it couldn't get worse. And it got a lot worse. And, if you talk to Jay Clayton now, had he known what would happen, he would have had a different attitude. So people that were originally hostile to what we were doing, there has been a lot of coming around. There has been a lot of education, and it has been a journey. And I know it looked pretty dark at times, but, and Ripple was alone at times, but I think the whole industry, all of us, pay a real debt of gratitude to basically taking that risk on personally and as a firm. And it really has made, the possibility and the alignment of the planets today possible. I go back to that case all the time and say, yes, an orange is not a security, right? And that's that basic finding makes possible all this innovation and investment inclusion that is happening now at scale across the world and across all major industries.
I just want to go back to something you said. Would you say Jay Clayton regrets his decision to bring the Ripple case?
I think we caught a lot of fish, right? and it was kind of a bury the hatchet type thing. I think Jay regrets the fact that lack of clarity, that use of ambiguity, this basically regulation by enforcement. I call it the Khashoggi approach, right? Hey, just come on in and pick up a marriage license. That's what happened to him, and he just got chopped up. This system where, if somebody wants to call you out for doing something wrong, let them do it. But don't be in a situation where, it's like when Coinbase went public and then they got sued for it's like that scene in Casablanca where they come in and the inspector is blown the whistle and everybody's being arrested. He says, what's wrong? And I says, well, I can't believe there's gambling in this casino. And then somebody comes and gives them his winnings, right? It's that situation is when you let Ripple do what Ripple did or Coinbase or whoever, Did you know they were doing something that you thought was wrong and you just didn't say anything? Or did you just not know? And so that principle, that can't be the way America works, which is that you're always looking over your shoulder.
And
so
a select few at the top can decide
a select few at the top
of an
can
entire industry.
Eeny, meeny, it's like a kind of Tony Soprano kind of view of justice. And,
Right.
and I hope that day is in our rearview mirror in America.
Last question, because we are out of time, but where do you see Ripple in 10 years?
So I think Ripple is, they're making all these investments in all these companies, and they're really looking to put it together to be the first fully integrated blockchain company that just basically realizes the world's going to run on blockchain, and they're just going to keep filling in and making a go of it. I think Ripple may, this is just someday, buy up some legacy companies and put them out of their misery. Their misery being the way they were running things on legacy networks. Okay. I don't want to make too many predictions and get them into trouble with the SEC, but I think it's time to put some sleepy technology and some sleepy operational practices to bed. Maybe we keep their brand name, but the guts of everything should be things like the XRP ledger going forward.
Could they get a banking license?
I think that Ripple should be able to get a banking license, yes. And with that, no more need for, like all these folks that are stuck getting these 50 money transmitter licenses, with all due respect, I'm a little bit of a Hamiltonian. That's a pain in the ass, and I don't really care that Vermont wants to do it one way. And this is a global thing. The blockchain doesn't really need to be regulated at the state level, right? This is a global phenomena, and so I do believe there should be federal preemption of the states, and I believe a lot of these things are actually just going to play out, at the global level. And so Pax Americana is really Pax the U.S. dollar, and so you can say what you want, but people still, even if they're hostile countries, what they have under the mattress? They have dollars, and dollars running on ledger is better than dollars running on anything else. So I look forward to that and other real-world assets all running on chain.
Amazing.
All right.
Greg, everybody. Greg Kidd.